This is the MTPredictor weekly update for July 31st. So here's our daily Dow we've been tracking each week here. And last week, well actually a couple weeks ago, we were in this wave 4 support. I gave you the targets for wave 5, and we came right up into the minimum wave 5 target last week, and then I showed you if we got a correction from here where that would be, and it was our decision point support. In fact, I'll remove that just for a second and put it on here with our tools. Our DP off the wave 4, and I gave you that area last week. The top of that support area, again around that 12,240, 238, 240 area. And you can see last week's trading, we came right down into this decision point support area. And we'll see where the market opens Sunday night. They're, according to the news reports, close to a debt ceiling deal. Really just kind of a lot of smoke and mirrors, in my opinion anyway. We've had this kind of situation before. If you remember, in the 80s, we had the Graham-Rudman Act that was supposed to give us balanced budgets. I think there was another one after that, the Budget and Emergency Deficit Control Reaffirmation Act that came in '87, and we still find ourselves today in the position that we're in. So I don't expect this act will be any different. But we'll follow, what the market says here as far as our investments and so forth. So here's the Dow. It's come into this decision point support area. We'll see if that area holds, and if we get a continuation of the prior trend, or if we look at, let's just pull up the S&P here. Here's the weekly chart of the S&P. Now you see we had this decision point sell signal on the S&P. That target was down here around 1224.72. However, we've had this significant high here. We sold off, which could be an impulse wave 1, headed into this kind of pink area here. Let me remove this, which would be our potential wave 2. And then we could project wave 3 down from here using our tools. Let's just go down wave 3. And we're going to click 1, 2, 3. Okay, that would put us on the S&P. If this wave 2 holds and we get wave 3 down, that put us around 1160 in the S&P, or thereabouts, at least to the minimum. Typical wave 3 down here. So if we can't take this area out to the upside, and I'll show you the resistance on the S&P, at least from the weekly standpoint. So this is bigger picture stuff, but the next big resistance in the S&P will start around the 1390 area. Well, let's see, it's probably 1389. Let's see if I can get that on there. Yeah, right in the 1380, 1388, 1389 area, we'll call it. Again, bigger picture stuff, and you will have some more support right in here on the weekly time frame, around almost 1390. No, I'm sorry, that's 13, not 1390, 12. That's 1238, 1239 area. Again, this is the weekly charts. This is a bigger picture, so it's something we want to keep an eye on, because this is what we call kind of holy grail trade setup. We don't have any red sellers bar in here yet, telling us that sellers are overcoming buyers. So there's no setup here yet, but we're in this area of resistance. And if this holds, we could see this area and later the typical wave 3 down. So would certainly be a healthy correction at that point. All right, let's take a look at Goldman Sachs. We've been following that. Again, it hit our major DP support here. We've rallied off of that. This time last summer, we got a rally off of that. There was a significant correction after that rally where we got this TS1 buy signal, and we went on to new highs in Goldman. So we certainly haven't seen that rally yet, but we have seen a rally off this low. Okay, question is maybe if we get kind of an ABC pattern coming in here or correction and get a TS1 like we did back here, this higher low, and then a nice move off of that, then I would say we would see if the banks can catch on and the markets move higher, or if the banks can move higher, then the market should follow. Again, the retail sector had been strong. The banks have been weak. If the banks catch back up, then markets are going to move higher. If Goldman, we talked about if Goldman and the banks in general, if it takes this area of support out, kind of the 120, 130 area, if they take that out, maybe 125 to 130 area, then that's going to be bad for the markets in general. The banking index, the BKX, same thing. We hit this major support in here. They've rallied off of that, and you can probably draw your trend lines here. But if that breaks down, that'll be trouble for the market. If they can stay above this major support, then that's going to benefit our equity markets. Okay, let's take a look at gold. So we came into the wave 4 support here in gold, and it was a good buying opportunity, again below the 50-day, above the 200-day. I projected our wave 5 up, which we came into last week, and we haven't made much progress beyond this minimum wave 5 resistance. Typical wave 5 resistance will start just below the 1720 area. If we do get a correction in gold and we come back below the 50-day, typically we're going to get a correction back to the decision point off the wave 4 low. Right, this would be an excellent long-term, if you're a long-term player in gold or silver, buying opportunity if we do get a correction back in here, which it's possible because of the debt ceiling debate. If that goes through, we may see a pop in the dollar, a pullback in gold and silver, a pop in the stock market and so forth. We'll see how that plays out. Take a look at silver. Silver got a couple of things happening, and I really like to look at gold to determine where silver is going, because the silver chart can get pretty messy. But we were in this wave 4. We began to head up. Here's our minimum wave 5. The obstacle now is this wave 2 or B, that we could see this as resistance and a correction from here. If they can push through, get in the minimum wave 5, then we'd be looking at a correction back to the wave 4 DP down here, just below $32 in silver would be the correction initially anyway, off the wave 4, if we can see this wave 5 up. So kind of in between, could go either way in silver. It will depend, I think, a lot on what gold does. Now, a lot of people ask me, what's why silver? And one simple answer is really think of anything that you can buy today that's less expensive than it was in 1980. If you think about housing, I think the average cost of a new house in 1980 was like $68,000, $69,000, $70,000, somewhere in there. A gallon of gas was like $1.20 in 1980. Compare that to today. A new car, the average new car was about $7,200. So there aren't many things that you can buy today um, that are less expensive than they were in 1980, but silver is one of those things. Silver is one of those things that you can buy today that will cost you less than it did in 1980. So silver is, you would say, undervalued at this point. So that's kind of an easy, kind of simple answer to kind of put it in perspective anyway. So that's silver. And oil, we did have a change in the oil trade here. Remember, we were long this oil. MTPredictor was long on the daily oil chart here. We did get a reversal signal. The trend is neutral, so we can go short. And actually on the, we can redo this trade to see on the short entry here, about 1.4R that you would take out on a reversal or the long side of the trade there. And then the short TS3 now has hit the 100% initial risk line, which means any stop at $100.63 is now moved to the entry, which is 97.75. So risk-free trade at this point. Either it gets down to the target in oil about $90.05, or you get stopped out at the entry. So good position to be in a risk-free trade there. But just want to make you aware that what was long is now short, and we'll see how this trade progresses through the week. And finally, the dollar. Again, the dollar, is interesting. We had the major bottom here in the dollar at this decision point. That's off this prior DP swing. That's where the support came in. They rallied the dollar off of this level, and have kind of going sideways. Here's your next support off of the major swing low there, sitting around around $72, or around 72, I should say. And then the next resistance, we hit this DP resistance up here, and they sold off, and our next DP resistance will be off that swing, right in the sitting right around 77. So we're in between kind of support and the next kind of major support and resistance is there. And like I said, with this debt ceiling deal, we could get a pop. If it goes through, again, it would be probably a short-term thing. I was listening to Jim Rogers. Interesting that he is very bearish on the dollar, but he's actually long the dollar just because everybody else is short. And he's not a very good short-term market timer, but just interesting on his perspective on it, because he too feels like the dollar could get a pop out of this, but it would be a short-term or short-lived thing, just like a debt ceiling deal might be bearish for gold and silver initially, but it's really just kicking the can down the road, and it's actually more long-term bullish for gold and silver, in my opinion. So anyway, that's we'll wrap it up there. Watch, continue to monitor these things. Be careful in the trading out there, because news on this thing until they've finalized it keeps coming out moment to moment and can really affect things intraday. So just be aware of that and play it safe. I hope you have a great trading week, and we'll see you again and do it all again next week.